Welcome everybody to another episode of the Scottish Property Podcast. It is 2022. Stephen Clark, Happy New Year.
Happy New Year, Mr. Ponte. Happy New Year, everyone.
We're doing this, I'm actually on holiday still, so I'm in Florida and we're just doing this Zoom recording. So it's great to catch up with you, man. It's been a while.
Commitment is always from you, mate. Commitment is always from you. Out there having a lovely family holiday in Florida and you're still recording an episode of the Scottish Property Podcast. Superb. That's
my commitment for you and the listeners, mate. But anyway, I want to take this opportunity to wish everybody who's listening a happy new year and a prosperous 2022. Hope it's a really good one. Hope everybody does lots of deals and it's a productive one in terms of property as well. Hope you've all set your New Year's goals.
Yeah, and that's what we're going to try and chat about today, is a bit of a review on 2021 and, look forward to kind of what our kind of goals, predictions, thoughts around in the market and what's happening right now, because we get a lot of questions come through in the group, don't we, that people that are starting out and asking, is this a good time to buy a property and stuff?
Yeah, well, I think that's what's kind of prompted this today. It's probably a good time to reflect quickly on 2021, because I think that's quite important to see where we are today and then what we think is going to happen in 2022. Obviously, we can't predict the future, but there's quite a lot of things happening and talk, where we can, different factors that are affecting prices. So we can talk a little bit about that. But let's go back 2021 then, Stephen. I think it's been a bit of a mixture depending on where you've been buying or investing, in the country. Like, I know it hasn't held you back, for example.
Yeah, absolutely. And it's been interesting to play in two different markets, so to speak, because obviously the stuff I've been adding to the portfolio in Aberdeen's kind of recovering from a depressed market, whereas everyone else in the rest of the UK has been a ridiculously hot market and been really difficult to get a whole decent deals, and it's definitely slowed down the amount of flips that I would have done last year, kind of with a very buoyant market. And it's just, I suppose, the supply and demand thing. In and out of lockdowns, the media has probably just held properties back from going on the market, which has created a huge surge in prices and not enough stock, is there?
Well, it's crazy though, isn't it? Because when we were doing our lockdown Zoom sessions, we had our meetings and that, everybody thought that this was going to be, terrible for property, and it was prices were going to crash, and everybody was going to be, getting their houses repossessed and furlough and all the rest of it. And now we're sitting here today, and it's I read the other day, some of the latest stats were double-digit figures for property price growth. Absolute boom times at the moment. I think there was one town, I think it was Motherwell, that was in the Bank of Scotland data that they released, and I think it was 16% growth. 16%. I was like, that's mental.
I'm sure my hometown, I'm sure in Dunfermline was very similar to that as well. It was one of the highest performing ones as well.
Yeah, and that's obviously, what has caused that? You look back and you think, well, the first half of the year there wasn't a huge amount of activity, obviously with all the lockdowns and all that. Then, as soon as that ended, there was this kind of pent up demand. Everybody rushed back into the market, and a lot of activity. From that kind of lack of supply coming on the market, so there was fewer houses for people to buy, and obviously that whole kind of race for space thing where people were wanting to get these kind of out of town properties with gardens and all the rest of it. That created a huge increase in you kind of 3-bed, 4-bed family houses as well. So that was a thing, and inflation was a thing as well, because a lot of people were hedging against inflation. A lot of investors were looking get their cash into property as well, so it certainly didn't hold back. I mean, if anything, I know a lot of investors who were contacting me. They were saying, can you get anything, can you get any deals, want to invest. They were just wanting to go for it, because cash sitting in the bank doing absolutely nothing, just eroding away. So that is a huge thing.
Do you think you've had a lot of new investors come to the market due to, things like the Scottish Property Podcast has been alive the last couple of years during a quieter time in people's lives, where they've probably had more time to listen to podcasts, go on social media, look at what others are doing, maybe go and do more research, look at YouTube videos, and just get more engrossed in content? Do you think it's then brought in more newbies into the market, that it's going to increase the demands even higher than the lack of supply as well?
Yeah, well, I think obviously it depends where you are in the cycle. Obviously, if you look back before COVID times, and obviously we've been on the rise for a few years anyway. Things have been on the up, haven't they? I mean, obviously like 3-5% rises year on year. But then we've kind of hit this boom. Now everybody's talking about property. You've now, look at the telly, all these kind of these programs that are coming back on, these kind of Sarah Beanie type programs, are coming back on the telly, and you get jumping the taxi, your taxi driver's talking about investing in property and all that. And that's when that everybody's into it. You talk to the guy down the pub, he's wanting to get invested in property as well. So that's kind of like a point where you think, how long can this boom last? But that's what we're partly going to talk about today as well. How long can this last? What's your thoughts on 2022 and where that's going to go?
I think that it's going to continue to rise. Now, I know that we've kind of changed our opinion on this right at the start of COVID, when it first kicked in. We all thought this was going to be the start of the crash, but it's just went that boom again. And if you look at something like the 18-year property cycle, it is following it. And if it is the case, then it has got another 2 or 3 years left, I would have thought, last time I looked at it. But yeah, I think the extra money in the economy from furloughs and bounce back loans, top up schemes, and we've not had the mass unemployment that the kind of scaremongering in the media would like to have portrayed. Everyone's got their surplus of cash. We've not been going on fancy holidays like Nick Ponty out in Florida for 3 weeks. So we've got thicker pockets. So I think the economy's there. It's going to bounce. I think, like you said, the supply's not there either. So that's going to just push prices that bit further and hotter. And
that was a huge thing with the stimulus and the amount of money printing that was going on, that the Bank of England pumped into the system, that all the central banks all around the world put into the system, which basically they were the ones that caused this huge inflation as well. It's all this extra money getting pumped in. Everything's going to start rising in price, because there's that extra money. So, they actually caused it. And now we're in this position now where things keep on rising and rising and rising. How fast is it going? And the only way they can try and sort of stop it is by, they've got this tool that they've got interest rates. That's the way they try and control it. But I've got to say, like, even rising interest rates, I don't think that's going to have much control. And the problem they've got with rising interest rates is, we look at the media and we look at the newspapers and all that, and it's all like, interest rate rises, property prices are going to crash and all the rest of it. But, if we actually look at it, right, so we were at 0.1%, record lows of all time. They've now put it up. The last month, the Bank of England put the interest rate, the base rate, up to 0.25%. We're still lower than we were pre-pandemic. I think it was like the base rate was 0.5% pre kind of COVID times.
Yeah, so we're tiny, minuscule increases in interest rates, so it's not going to have a huge effect, is it?
Yeah. So my point is, basically, if you're an investor and you're worried about rising interest rates, I don't think it's really as scary as what some people make out. Because it's not going to break your cash flow. If you look at it, if you're paying interest-only mortgages, and even if the lenders take on those increases, it's not going to break the cash flow. The good thing is,
what do you stress test your portfolio, Nick, when you're looking at a buy-to-let? Do you stress test it to 5% or?
I've got a 5% number that sometimes I use. If it goes through my mind that I'm starting worrying about rising interest rates, then I usually go 5%. But just recently, I was like, I wonder how much it would take, for it to actually run at a negative and just like not be profitable. And I think it was like up at like 8% or something like that. Do you know what I mean? But it's never going to get to that, because what has happened is, because the government have taken out this huge amount of debt, obviously to pay for all these bounce back loans and all this stimulus and all the rest of it, they don't want to increase it so far, because then that's going to increase the debt level as well. So they're kind of at that point where, I don't think interest rates, base rate will go over like 1%. I think that would be really extreme if it went over 1%. Do you know what I mean? Because we're in this era where, like, interest rates, we're just used to them now, right? Since like 2000, whatever it was, 12 or 11 or something like that, when they went right down. We're just used to them now. And anything that goes above like 1% would just be a disaster for the economy. And they would just be like right back at square one. Do you know what I mean?
No, absolutely. I tend to completely agree. I don't think it would go up that much. If it does, like you say, it's going to go up in increments to 1% or something. Which when you look at it, where it was 15, 20 years ago at 14, 13, 14%. Like, it's never going to go back to that.
Yeah, and this is the problem, isn't it? You listen to some kind of old school people and they say, oh, but I remember when it was like interest rates were 14% and all that. That's just not going to happen, is it? It's not going to happen.
No, it would collapse the economy, yeah.
The other interesting thing, well, going back to the inflation thing, because that's like, I mean, I'm obsessed with inflation. I'm out in the States at the moment, and it's like 6.8%. I mean, things are super expensive at the moment. Even fuel, which, like, I don't know if you've ever been to America, but like, used to come to America and fuel was dirt cheap, man. That's why they all drive about in these big gas guzzlers, these big trucks, and all the rest of it. Do you know what I mean? But even fuel's gone up right a lot over here. And you go to a supermarket, man. Even like a tub of Nutella, like I want to make the kids pancakes. Like I went to buy a tub of Nutella, it was like £9 or something like that. Do you know what I mean?
And that's what I'm saying. Like, what's that rise? Because the things that I've always looked at on the kind of consumer price list on it, it's never been a 6% rise. It's been something ridiculous, like 50, 60, 70% rise. So do you think that the figures that they're putting out there are false in the media?
I think, well, obviously they use the CPI, Consumer Price Index, and that's obviously like they call it a basket of items that they analyse and stuff. But it depends what's in the basket, doesn't it? Do you know what I mean? So I'm not 100% sure what's all in there, but there was quite a lot of people. I posted a thing on the Facebook group, and a lot of people came in and said, like it's all the figures are skewed because, like, they're not. Inflation figures that are putting out to the media are a lot lower than what they actually are, and all the rest of it. So some people are saying that really the true inflation is a lot higher, depending on what you're buying, like, building materials and all the rest of it. A lot of people have been talking, cost of timber, I think it's 15% pretty much, like I think it went up a lot higher and then I think it's kind of balanced out around about the 15%.
How do you think the huge cost of material rise is going to affect the property market going into 2022? Well,
that's only going to be passed on to the buyers, do you know what I mean? So all the big builders, even the big builders like, Taylor Wimpey and all that, big house builders, they're going to have to pass these price hikes onto the buyers, which is only going to fuel property prices in 2022 as well. Do you know what I mean? So
yeah. Do you think it'll put off like smaller developers or maybe guys that are doing flips and stuff like that as well, because they're a bit put off by the huge rising costs of trades and materials?
Yeah, it certainly it's put me off because, like, I mean, you know me, mate, I always like to do a flip as well. Do you know what I mean? But I've not done one for years. But part of it was I was building my lettings business. But part of it now is because I literally can't be bothered with like trying to get trades first of all, because all there, there's a labour shortage. So all the trades are so busy. Part of it is as well price of materials. So like, I'm so out of touch at the moment. Like, what I would pay for a bathroom, but the last time I did a flip, 2017, 2018 or something like that, I know what I'd pay for a bathroom, but now it's like, I mean, the increased a lot more. Same when, just basic things like kitchen, I put $3,000 down for a kitchen. Now it probably about, $4,000.
No, it's interesting because I've took a bit of a view for that as well. It's not a big focus for mine for this year. It's flips and it's quite a lot to do with that. There's good opportunity in flips because obviously from what I've seen for the projects I've done this year or last year, you're getting well over the asking price. You're getting a good return on it. But the cost trying to get the deal in the first place, and then the cost of materials and labour, plus the hassle of trying to get your labour as well. It's not making it as appealing as it was before.
Yeah. So let's just kind of review the different factors that could affect the prices. Obviously, you've got the underlying supply and demand. Now, part of me thinks that obviously, COVID can have a big impact on this and what's happening in that as well with this Omicron. Now, obviously, we've yet to see how the true extent of the damage that's going to do to the economy, this latest wave and the Omicron variant and stuff like that. But, that obviously affects, public sentiment and people's view of selling their house at that particular time. So, traditionally estate agents are always going on about, shortage of stock levels. There's been a shortage of stock over the last couple of years and all that. Is that going to change? Or are people still going to be, with this Omicron, are people going to be like, oh, this is not a good time to sell my house because, of all this stuff and it's holding people back and I want to hold off. Do you think that's going to be a thing?
No, I think market opinions now is that the market's hot. It's a great time to sell. But I don't know if people are maybe just kind of a bit reluctant on moving or making big changes right now. Everything else is going on. Maybe looking forward to going back on holiday and not moving. So I'm not sure, but I've certainly made a suggestion to my wife over the Christmas and New Year period about selling our house, and before she completely dismissed it. But every estate agent that I speak to is saying that if you're put, and even her friends that are buying houses now at the streets around about our area, all estate agents are saying if you want to stand a chance of getting a property, you have to at least offer 15% more. So if we can get 15% more right now for our property, then I'm like, this is a no-brainer. An inflated market and get 15% more. So she's even now considering like, oh well, could we sell it now and rent for a couple of years and be liquid for a crash happening? But I suppose it's time in the market rather than timing the market, isn't it?
Yeah, I mean that's a good point. About time in the market and that. You do get plenty of people that ask when's the best time to buy and stuff like that. What is your answer to that question?
I think if you're in property for the right reasons, then any time's the right time to buy. You could buy now. I've said this before. You can make money in property in any market, upwards or downwards. But if you're buying for long term, which let's face it, most people that get into property should be for long term investment. It doesn't matter when you buy. You're always if you could follow a downward trend right now, but if you're buying it right now and you're putting your money in, your money's not doing anything sitting in the bank anyway, so it's going to beat inflation inside a property right now, as that rises significantly. But if you're keeping that long term, you're always going to do okay with it. I think you shared the best and worst deals a couple of months ago on the podcast, and your one was a great example of it. Buying at a peak, reducing by 25-30%. To then going up and past that, to going plus 25% now. So you're looking at it going, you're down 50 grand, back up. It does run in cycles. So I think any time is a good time to buy. Obviously, right now, for strategy wise, if you're buying and holding long term, then any time's good to buy. If you're buying and flipping, I'd be cautious in making sure you're getting it at the right price. But you've also got the kind of inflated material and labour costs, but you've also got an inflated price at the back end due to supply. Going on the market, so you might be able to get a good bit more. But if the market sentiment changes and the demand isn't as good, you might not get what you expected as well. So I'd be cautious.
I think there's such a good time in terms of we talk about rising interest rates, but really, what a great time! So cheap money. I mean, like 0.25%. You're pretty much, you can get mortgages for what is it, like 3. If you're getting personal buy-to-lets, you can get a lot cheaper, but most of my mortgages are like 3.5%.
I mean, but Paragon there just before they put the interest rates up, where we were getting 2.75 for a while there. So, and that's the limited company. Ridiculous.
I mean, it's such cheap lending, and with prices the way that they're going, you can tie in capital growth at the moment as well. And I don't see that stopping. Really, think things are going to rise as well. I just think from my own point of view, and this is just me. We can't advise anybody else, but I've got cash there, right? And I've told you I've got cash sitting there. And last year I was kind of floundering about trying to find the kind of BRRs down in Glasgow, and it was really difficult. I mean, let's be honest, a lot of people that are listening to this and based in Glasgow things were really tough to find a good deal where you could pull out all your money or most of your money after a refurb. I ended up, I kind of pretty much got to the tail end of last year, and I was like, I'm just going to buy just solid, decent flats that are ready to rent out now, because I don't think it's going to get any easier for the next year. So I'm just like, I just need to get my cash and assets, because it's now, with inflation, it's getting absolutely destroyed in the bank. I mean, it was getting destroyed anyway, but now it's getting even more destroyed. Do you know what I mean? So I'm just going to try and buy decent flats at full market value, home report value, and that's basically my strategy for 2022. Mortgage availability is good. There's plenty of lenders out there that have got a good appetite to lend. Banks in pretty good condition. Obviously there's a bit of uncertainty around Omicron and stuff, but I think that's really only going to affect you if you're selling, if you're doing flips and all the rest of it. If you're buying, like you say, long term. Let's talk about rents. Rents have skyrocketed as well with inflation as well. That's obviously boosted rents too.
Yeah, we chatted about rental demand on a recent podcast as well. You were talking about some of the Glasgow stuff was ridiculous, like hundreds of inquiries within an hour of stuff going on the market, and that's just pushing rental prices up as well.
Yeah, I mean, like some areas, like 8 to 10% rises in rents over the next year. Now, obviously, the government have brought in a consultation there to, they've got a plan basically. The plan is rent controls. That's to come, but at the moment, certainly things are really, and I think rents are going to continue to rise as well. I mean, it'll be interesting to see what happens with this, inflation, because if people are starting to obviously get hit elsewhere, with fuel prices, energy prices, petrol prices, food prices at the supermarket, are they going to have that availability of cash to put down as a deposit, for a new house, or first-time buyers? Are they going to have that deposit to put down a flat? So that could have an impact. From the renter's point of view, our landlord's going to be hit with higher rent arrears because people are going to be struggling. Always. I think 2022 is going to be a big year in terms of, it could go bad for a lot of people in terms of they might struggle in terms of actually being able to, afford the basic things. I think, there's going to be a lot of tightening up.
I've got one kind of severe rent arrear case, and she's put it down to her mental health because of the last couple of years, and she's didn't pay much rent for a 6-month period. Gave her a 6 months notice to quit, which was up in the beginning of December, but she didn't move out. I didn't want to take it any further, obviously going up to Christmas and New Year, but now I need to go and get her out. And if this is a first year tribunal with a backlog, what's going on now? I could be looking at serious arrears with this property, and you just kind of put the nail on the head as well. It might be people's mental health, or struggling with losing their job, or struggling to make ends meet. So definitely those factors to consider.
So let's just kind of summarise then. Personally, I don't think things are going to drop in 2022. I think we're not going to see the crazy growth that we have seen, like in this kind of latter part of 2021, where we're talking about double digit. I think things will kind of calm down a little bit. So I'm maybe predicting, like, I think overall in Scotland it was like 11. It depends what figures you're looking at, right? But I think the ones I'll go to the government website is the ONS data, which is all the price data on the land registry. So that's like actual sale prices, right? Whereas if you look at like Rightmove and all that, they analyse like asking prices, which I don't really see much point in, So like if you look at ONS, I think it was like 11% rise over the last 12 months. Like I think that will go down a little bit, like, but I don't think things will go into like, it's not going to be a crash. I think it will slow down to like maybe like 8% or something like that over the next 12 months. Because obviously you've got rid of all that kind of pent up demand. I don't know, what are you thinking?
I think we're going to see double figures again. I think it's going to be another year of what we've just had. I think the supply is not there, particularly for, like you said, the 3-bed, 4-bed houses, detached houses, and garden spaces. I think that's just going to be the one that'll boom the market. That might even see more growth. But the flats, not as much growth. But I see that going up, and I see the rental demand hugely increasing as well.
Yeah, I mean, it wouldn't surprise me. I mean, certainly wouldn't surprise me, and I'm not like worried about it at all. Like, I just think the inflation thing's one to watch, but I'll keep you updated with that because I'm obsessed with it.
I know you are, mate. I know you are, and I like it. Is what you're saying as well. Like there's no point in stalling completely if you're buying property, and like you say, sitting on the fence or getting scaremongered into not taking action. If you've been wanting to take action, you've got the right education, you've done the right research. Why not? And even what you're doing with buying at kind of market value, if you see a 15% increase in the next year, you're going to get quite a lot of your money back out if you refinance at that point. But I think if you're always buying, right, looking for a smart deal, and if it suits your kind of strategy, then there's never a bad time to buy, is there? Yeah,
and as somebody else put it, and I think it's one of the Americans that I listened to, cash is trash. So get your cash out of the bank, get it into assets to hedge inflation, I think, is the main message. Do you know what I mean? Because you're literally going to just have money just burning away in the bank.
One thing I did notice, which was this might be a point that you might not thought about or saw, but I saw something when they were looking at the price index, and I think there was 5 or 6 areas in the UK that had dropped, and 6 of them, or the majority of them, were all around London areas like Reading and areas in London. And obviously one of them was Aberdeen. I think it was the one in Scotland, was obviously Aberdeen, which made me quite interesting, because I always thought that in the Scotland and the rest of the UK seem to always kind of follow a London trend. So if they've had a boom last year and now they've had a drop in price, are we following the same trend in a year or two's time? Is it going to be this year? So I thought that may be quite interesting to pay attention to.
Well, I think London got hit quite badly by a lot of people, like, you know, this remote working thing, didn't they? Do you know what I mean?
Yeah.
So a lot of people left and they had a bit of a kind of a lull, but I think people have returned to the city now and they are kind of they're back on again. But that was a thing, it was a kind of mass exodus of people out of the city. But I think city centres have now come back a little bit. Although I did read the other day that like Next in Glasgow is closed down, so I don't know. Like retail might be struggling a bit in the city centres. But that's the thing. I was listening to a podcast the other day. It's a bit frustrating. I don't know if there's anything like this going to happen in Scotland, but they were talking about opportunities. So opportunities for 2022, and they were going on about this permitted development because of all this like struggling city centre. There was like basically the councils and you know all the authorities down there were basically, you know, you could buy a commercial building basically, not bother getting planning permission for it, just convert it into residential. Right. You know, have you heard of anything like that up in Scotland?
No, we still got to go through planning permission, change of use and building warrant, so it takes a lot longer, which will affect investment in Scotland if that's the case, because people don't want to park money in the buildings to then wait for 6-9 months a year to go for planning and building warrant before they can carry out development. But like you say, pick up the keys in England with a permitted development and build it straight away and sell, like it's, you know, half in that time of the project, which is obviously more profit. So that's a good point.
That sounds like a great strategy, and like I think you know, I'm quite jealous that they can now do that. Do you know what I mean?
Have you got any tips for the listeners on goal setting that you do for 2022? And I know you'll be setting goals for your kind of lettings business as well as your own property portfolio as well. Is it you got any set methods, or is it just kind of aligned with your kind of bigger, you know, your 5-year goal, which was your 45 time you hit 45?
Yeah, I've to be quite honest, mate, because I've been in holiday mode. I've not really reviewed any goals for 2022, apart from I need to lose 2 stone of weight. But the goal still remains that kind of like 5-year goal that I set out. You know, it's like kind of by 45 get 20 buy to lets. I think I'll probably hit that okay. But I mean, I guess we did a goal setting episode last time. You know, I think obviously get it all written down. My missus actually, Lisa, she did a fantastic thing. We did it. It wasn't like the start of the year or anything like that. It was actually a few months back, but it was like a kind of vision board thing where it was all like, you know, like family, business, health. Do you know what I mean? It was all like all written down, and she did it all in colours and all that, and we stuck it up on the wall and stuff. And it's great to actually look at, and you can sort of see where you're at with it. What about yourself?
Been taking a bit of time to review last year. Obviously, last year was a really, really busy year for me, up and down the country doing different deals and the portfolio. I was one shy of what I wanted to add to the portfolio last year, which tells me that they weren't quite stretched enough. I think I wanted to put in 20 into the portfolio last year and only got 19. So this year I want to try and hit 50 just to try and push it. But then I'm also thinking that along the same lines as you were thinking, was that the last couple of years have been pretty much focused on business and not enough travel and health and fitness. But obviously, because of what's been going on, I've been taking advantage of the opportunities in the property market, adding in sourcing in Aberdeen into my business and adding in the workshops in the business. It's been really, really crazy busy. So I am very cautious of not going at that same pace and taking a bit of a step back, and obviously taking on people as well in the business, to employees, but getting that bit more time for family time to then go on trips and take some, like you're just doing now, mate, a nice 3-week holiday with the family.
Yeah.
Like that's the kind of thing I want to make sure that's the goals are all focused around those targets rather than the business goals this year.
Yeah, I mean, like as well, you know, that's kind of, I've been reflecting on that quite a bit, and I've been like really realising how kind of lucky I am to be able to have this, you know, 3 weeks just like out here, because there's such a lot of doom and gloom back home at the moment. And for me to come out here for 3 weeks was quite a big thing, because obviously I've got my business now, my lettings and stuff, and I was like, I'm going to be able to cope with this because, you know, maintenance, repairs, changeovers, all the rest of it. But I've managed to set up the systems and processes where I can basically log in each day, see exactly what's happening. If there's anything needs done, then I can basically do it from my laptop anywhere at all, just like we're doing this Zoom. Do you know what I mean? It's like anything can be done. Anything in my business now can be done abroad, which is like what was one of the main reasons of, like, you know, building a business in the first place, because you're like at the start, you give up a 9 to 5 and you think like, I'm actually working 24/7. Do you know what I mean? And it's like you're knocking your head against the wall, and it's fucking hard work. But then when you're able to do stuff like this, it makes it all worthwhile.
Yeah, the conversation with my wife Kelly, the last week, and it was talking about we were going to have the first year when Maya's at school, for the 6-7 week school holiday. And I've never really actually thought about it, because my whole plan was, my 5-year goal just ended last year in September, and that was really to get my business to a way where it was going to be financially and time freedom to make sure I could do school runs as when I wanted to take Maya to school and pick her up. And I did do that. And so I the refocus was now, what's the conversations for school holidays? And my dad moved out to Brazil during COVID, and I've not seen him for a couple of years now. So I was just saying to Kelly, I'm going to take 3 or 4 weeks off and just go to, if you can't take the time off work, I'll just go out to Brazil and take Maya, and we can spend, 4 weeks out there. And she was like, what? You're going to sit out there by the pool and for 4 weeks? And I was like, I can just sit with the laptop, do a couple of hours work and, tick things along. But that exactly that. Like, this is what you do it for it. Because right at the start, it's 24/7 for years until you build up to a point where you can start actually allowing yourself to take that bit of time off. And you're good with systems and processes as well, putting in place, which is essential for restracting yourself a little bit out of the business.
Yeah, nice one. So just to wrap up, so what's your main strategy then? Just continue as you were.
Continue as I were. Yeah. I'm really enjoying the workshops. So I'm going to put in 3 this year. I've just thought it was a phenomenal. It opened my network up to different people that I would never have had opportunities to meet, and I actually really get a kick out of like seeing the results when they get results. So I'm going to do 3 workshops. I've been getting asked to do one for just flips. So my workshops very much covers like buy to let, raising private finance, buying, flipping and sourcing. This kind of strategies I do. But I've been getting requests saying, look, now's a really good time to flip and grow a cash pot. You can, you're maybe leaving a little bit too much money in deals to do BRRs right now, but flips are really popular. So I've been getting a lot of requests to do a kind of intense workshop on flips, which I might consider doing as well in the summer. And it's going to be adding to the portfolio. And I'm not as fussed for flips this year, to be fair. If I do pick up a couple of flips, I'd really like to do the flips that I did. I've done 2 flips this year or last year, where I flipped them straight onto auction and made a flip profit within a couple of weeks. I would like to do more of that, because obviously I'm trying to work a little bit smarter than harder. So if I can do more of them this year, I would definitely be up for those, rather than actually full renovation, big developments as well.
Yeah, nice one. No, for me, it's pretty much like I need to get 6 buy-to-lets this year. Like last year was pretty poor. It was only 2, but still making progress. But yeah, 6, definitely going for it.
Go for a portfolio?
What's that?
Would you go for a portfolio?
Yeah, I don't really know. I don't really have any experience in buying portfolios, but talking to you and obviously, looking at other people, that is obviously would be a good option, definitely. So yeah, if anybody's got any opportunities out there, then certainly bring them to myself and Stephen, definitely.
No, superb. All the best for 2022 to yourself and all the listeners.
And just quickly before we go, we should mention our networking events. So unfortunately, we have cancelled Aberdeen and Dundee due to lack of numbers. Obviously, a lot of uncertain times at the moment. In Scotland, a lot of kind of doom and gloom. People are just a bit kind of reserved and what they're doing at the moment. So we've decided to take that call, cancel Aberdeen and Dundee. But
do you know what? It's given us an opportunity to come to. I'm looking forward to coming to Glasgow, catching up with you guys as well. If you need me, I can be used for anything as well. And I think the girls, Property Duo, they're going to go down to Edinburgh. And I think I'm going to touch base with Keza and Paul and see what ones they want to go to. I think they're quite keen to support the other ones, because obviously, doing our own events, we're not going to get a chance to go to the other events. So, yeah, unfortunately, the timing of the year, the bit of doom and gloom in the media, they're smaller cities. They weren't going to get the same demand that Glasgow and Edinburgh would have got. So we're just going to focus on the January event for Glasgow and Edinburgh. Really looking forward to them. So that's Wednesday, the 12th of January.
Yeah, that'll be subject to any government changes and legislation or advice guidelines. So yeah, we will keep updates on the Facebook group, or if you've bought your ticket through Eventbrite, then we'll certainly email you if there's any changes to that. Okay, thanks very much for listening, guys, and we'll speak to you soon.
Thanks for listening, guys.